Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research, and welcome to our top stock picks of the week. This week I'm joined by my colleague Andrew Rocco. We have two exciting picks for you, so let's jump right in. So I want to start with the rotation that we've seen this year. We all know that we've experienced a defensive shift with this latest correction as market participants have moved out of technology and discretionary names and into more defensive areas. Every year brings a different market theme, and it's our job to discover that theme and position our portfolios accordingly. With this underlying premise, my top pick this week is one of the largest exchange operators by volume in the United States. Trading volume is driving increased transaction fees, and as a result is fueling organic growth. In addition, the company boasts a compelling inorganic growth story given its prudent string of acquisitions. It's a Zacks ranked number 2 buy. I'm referring to Cboe Global Markets, ticker symbol CBOE. Cboe Global Markets offers cutting-edge trading and investment solutions and operates through 5 segments: options, North American equities, European equities, futures, and global FX. In addition, the company offers Cboe Clear Digital, a regulated clearinghouse. So this stock exchange operator also has strategic relationships with well-known industry players such as S&P Dow Jones Indices, IHS Markit Limited, and MSCI. Recent acquisitions are improving Cboe's competitive edge by diversifying its portfolio, generating expense synergies, and expanding into new geographies. The company has acquired 9 companies over just the past few years, one of which was rebranded as Cboe Canada to strengthen its foothold in a key capital market in the north. So Cboe expects to further grow Canada into a global hub for equities trading. That's a bit about this company's background and services offering. Let's shift gears a bit and take a more in-depth look at some fundamentals for Cboe. Digging a bit deeper, Cboe is part of the Zacks Securities and Exchanges Industry Group, which is currently ranked in the top 5% out of approximately 250 industries. We can see how well this group has held up this year, with a year-to-date return of over 9%, handily outpacing the major indexes. And because this industry is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months. Quantitative research studies suggest that about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And stocks in this group are expected to experience above average earnings growth, providing us with another confirmation signal that this group is a great place to be. Moving to our snapshot page here, we can see that Cboe is a Zacks ranked number 2 buy. The company has beaten earnings estimates in 3 of the last 4 quarters, and the stock price is reflecting this bullish theme. This is exactly what we want to see, as it gives investors confidence that the bullish run can be sustained. The stock is displaying strong momentum and is up about 9% this year. Only stocks in very powerful uptrends are able to experience this type of outperformance. Looking at full year fiscal 2025 EPS estimates, analysts covering Cboe are in agreement and have been raising their estimates heavily by 4.24% over the past 60 days. The Zacks consensus estimate now stands at $9.34 a share, reflecting potential growth of 8.5% relative to the year-ago period. Revenues are anticipated to grow 7.4% to $2.22 billion during the year. These are the types of trends we want to look for when narrowing down our list of potential stocks. So Cboe Global Markets, ticker symbol CBOE, is my top pick of the week. The company's showing strong growth metrics and should continue to benefit from this year's defensive shift. I see more upside ahead for this stock. Thanks for watching, and next up, Andrew will share with you his other top pick of the week.
Thank you very much, Brian, and welcome everyone. My name is Andrew Rocco. I am a stock strategist here at Zacks Investment Research. I also do manage the Tech Innovators portfolio for our Zacks Ultimate service, and today I will be covering my top stock pick for Monday, April 28th. So let's jump right into things. So my top stock pick for today is Uber Technologies, ticker symbol UBER. It's a Zacks rank number 3, which is a hold. And Uber Technologies is the dominant player in the North American ride-sharing business. Beyond the United States, the company has expanded predominantly into Canada, Latin America, Europe, the Middle East, and Asia, ex-China. And through its mobile app, the Uber app, and a vast network of drivers, Uber offers various services to customers based on details like the number of riders, vehicle style, pets, and rush services for a higher fee. In addition, Uber has diversified into the delivery business, which we're going to talk about right here. So Uber's delivery business is called Uber Eats, and it's one of the better parts of the Uber business. It competes with DoorDash. And really what sparked this business for Uber was the COVID-19 pandemic. It obviously upended many businesses. Many restaurants had to rely on food delivery with the stay-at-home policies from the governments around the world, really. And during that time, online order volume surged. But even after the economy reopened, we're not worried about COVID-19 anymore. The habit of placing orders online has really stuck, especially among the younger generation. So meanwhile, in a recently announced multi-year partnership, Delta Sky Miles members can earn miles on Uber rides and Uber Eats deliveries. Uber Eats has partnerships with Costco, Domino's, Instacart, and countless others. So a recurring theme of today's presentation is really Uber's new CEO is doing a great job of forming these strategic partnerships in specific markets, basically under the umbrella of Uber, and just mentioned a few of those. But let's move on to some of the fundamentals here. So the company has really dramatically improved its fundamentals, really starting in 2023. And to be profitable in the ride-sharing business requires tremendous scale. So in 2023, Uber finally scaled to the level where it is consistently profitable. And you can see that profit, 2024, it had an abnormal spike, but that profit on the top, the bottom line results have been increasing steadily as the company scales. And another positive sign is that with these improved cash flows, Uber management is intent on rewarding its shareholders. So last year, the company announced a massive $7 billion buyback program, which was the first in company history. So they wasted no time. They become profitable. They have this good cash flow, and then boom, they're offering this $7 billion buyback. And those buybacks, what it does is it shrinks the number of shares outstanding. So all the stock market is, of course, is supply and demand. Less supply of shares is going to be a bullish catalyst for the stock, in my view. Now, let's talk about one negative, but I'm going to break this down for you. So last week, the U.S. Federal Trade Commission sued Uber, alleging deceptive billing practices for the company's Uber One subscription. The regulator claimed that customers were wrongly promised savings when they sign up for Uber One, and that the company makes it difficult to cancel the subscription. So obviously, this news is a negative for the company. But what I always urge clients and investors to do is to never look at the headlines in a vacuum. So I call this price action versus news. It's something I got from Stanley Druckenmiller, who's the legendary billionaire investor. And basically what it means is how a stock reacts to bad news is often more important than the news itself. So this is obviously bad news. The FTC sued the company, but all Uber did is it pared its losses. It only finished down about 3%, and it held its 200-day moving average. So I always say the reaction to negative news is more important than the headline itself. And in this case, it kind of reacted as well as you could expect, all considered. Now, on the good news front, a bearish argument kind of against Uber is that autonomous robo-taxis will replace Uber, like Waymo and Tesla is looking to release one. But Uber has forged a strategic partnership with the current leader in autonomous taxis, which is Google's Waymo. Waymo has the largest robo-taxi service in the US, and it's already available in multiple states. I think they're doing like 250,000 rides at this point. And customers can book Waymo robo-taxis through the regular Uber app, maintaining the familiar Uber experience. And the Uber CEO said, "We're thrilled to build on our successful partnership with Waymo, which has already powered fully autonomous trips for tens of thousands of riders in Phoenix." So through this expanded partnership, Uber will provide fleet management services, including cleaning and repair. And then Waymo will provide the cars. But that is definitely an important relationship, and I'm hoping that it expands. And one signal that it might be expanding is last week, a deep-pocketed options player bought more than 70,000 worth of far out of the money July 110 Uber calls. So these are really cheap calls because they're so far out of the money, but they're very aggressive because the stock is currently trading at 78. And again, these need to hit July 110s. So my guess is that the buyer of these calls is betting on even more expanded partnership with Waymo, or potentially even a buyout. So in my view, a buyout, and this is just speculation, of course, but a buyout, Google buying out Uber would make a ton of sense. Google's flush with cash, and buying Uber would allow the company to vertically integrate, cut costs, and gain access to millions of international customers. So we'll see how those play out. But either way, it's always good to see bullish bets in stocks that you're analyzing. And another important partnership was announced last week, and that's with the Volkswagen. So Volkswagen and Uber will bring autonomous VW ID Buzz vans to Los Angeles starting in 2026, and then they'll move to other regions, of course, as long as that goes successful. So Volkswagen has been testing its autonomous tech for years. They're already operating a ride-pooling service in Hamburg, Germany, also set to start using autonomous versions of the ID Buzz soon. So what I like is that, unlike take for example, a company like Blockbuster Video, they didn't kind of adapt and evolve as new technology came. And of course, Netflix came with first DVDs in the mail and then streaming and just completely wiped them out. What I like about what Uber's management is doing, they're not staying comfortable. Even though the company became profitable, they're skating to where the puck is. As the great Wayne Gretzky says, you want to skate to where the puck is going, not where it has been. So that's what Uber is doing with all these partnerships. They're not just going to sit back and let Waymo or Tesla take them out of business. They're going to forge a couple key relationships. This one's going to be more vertically integrated. They have the one with Waymo. So I do like their approach. They're kind of hitting it from all angles to make sure that they retain their dominance in the ride sharing market, which is a massive market. Now, you may be wondering why I chose Uber over the other rideshare giant, which is Lyft. Uber shares are holding up extremely well compared to the market and its main competitor. For example, over the past 2 years, Uber's up 138% and Lyft is only up 17%. So I always like to traffic in the leader, and the price action itself is telling me that Uber is the leader over Lyft at this point, and they have a major edge based on this price action. And Uber shares are up a robust 29% year to date, while the S&P 500 is stuck deep in the red. So that's an obvious sign of relative strength. And typically when a stock holds well during a bear market, as soon as that market pressure is alleviated, it tends to turn into what I call a true market leader. Now, onto the daily chart. We're going to do a little bit of multi-time frame analysis, which I view as the best way to look at technicals. And right now you're looking at a daily chart of Uber. So each bar represents one day. And remember, the market's been sliding, and you can see Uber, it hasn't been uptrending, but it's just been holding nice and sideways. And now it's forming this classic double bottom base structure. And what I like about this base structure and what it makes it sound, in my view, is notice how that right side of the double bottom undercuts the left side. And what that does is it shakes out weak hands in the stock, and it allows the stock to get rid of them so they can move higher. So this is a really sound looking double bottom base structure on the daily chart. And then if you move to the monthly chart, you can see the stock is moving out of this long base structure. Remember, each one of these bars is 1 month. And you can see it has what I call a support and resistance flip. So this was at one time resistance. Now it has flipped to support. And look how buyers just keep coming in off this previous resistance level, and the stock's looking to break out. Again, my guess is as soon as that market pressure is alleviated, Uber also has earnings coming up. Let's see, May 7th. So May 7th earnings might be a catalyst, or just the general market strengthening from here might also be the catalyst that sets it free. But either way, the stock looks poised to move higher. Uber Technologies, in summary, is a fundamental leader with consistent profitability. It has that massive share buyback program, which we love, robust relative strength performance, these key partnerships, and it's in a dominant position to kind of continue dominating the rideshare and food delivery market. So thank you guys so much for tuning in. Again, my name's Andrew Rocco. Thanks so much for watching. And just so you guys know, we do have a promo. If you go to zacks.com/promo, you can learn more about it there. And again, thanks for tuning in and have a great day.